Now, our next question comes from Hayden on Instagram. Again, if you have a question to ask us, DM it on Rich Habits Podcast on Instagram or richhabitspodcast@gmail.com. Hayden says, "Hey guys, my name's Hayden. I'm 28 years old and I live in San Francisco. I just want to say how grateful I am for your show. It's completely changed my outlook on financial success. Until recently, I only had a 401k through my work, but after listening to your show, I finally opened a Roth IRA. I'm excited to start contributing $500 a month. Let's go, Hayden."
Yes.
Hayden says, "My portfolio is made up of VOO, VXUS, and QQQ on Vanguard. The issue is, however, that Vanguard doesn't allow me to buy fractional shares of QQQ because it's not an ETF that they created, which means I can't automate that portion of my portfolio away. So what's the best way that I can handle this? Should I let part of my contribution sit in this like cash settlement fund until I can afford a full share of QQQ, or is there a better way to have this money invested instead of sitting idle for months? Thanks again. The show has made a huge difference in how I approach my financial future." Wow. Hayden, it's like as if there's more online brokers out there than Vanguard. It's like the sponsor of our episode, public.com, doesn't also have a wonderful Roth IRA product that is offering a 1% match now on all contributions, and you can automate fractional shares across the gambit. You kind of see where we're going with this, right? So yes, Vanguard is very rigid in the sense that if you are not investing in their ETFs, right? If it, Vanguard, whatever ETF, VOO, VTI, VGT, yeah, you get the point. Those ETFs, you can do fractional shares because they're, want to make sure that you buy them. But other ETFs, right? QQQ is Invesco, right? And you'll see SPY, that's Spider. And so these other ETF issuers, they don't offer fractional shares, where on the flip side, public.com does. And public.com also offers investment plans, which means you can just automate a percentage to whatever specific ETF you want from, let's say you mentioned this $500 a month, right? I think it was 500. Yeah. So let's say $500 a month. Let's say half of that is going to go to VOO, 25% is going to go to VXUS, and the other 25% is going to go to QQQ. That means that 25% of your $500 every month goes automatically. You don't have to let it settle. You don't have to wait for, to buy a whole share of QQQ. It gets invested immediately. So there are a ton of ways to go about this, but the easiest is to simply migrate off of Vanguard onto Public, receive a 1% match on that deposit, which is amazing, and then rock and roll with your investment plans and just do the normal percentages that way.
And just everyone needs to understand, you can have multiple platforms. You can use many, many platforms for different aspects of your investing style and portfolios. I have multiple. I have Vanguard, I have Schwab, I have E-Trade. Austin uses M1 Finance. We use Public. Public is probably our favorite. So just understand it's okay to have your money in different places as long as there's a purpose for it. Public is our favorite because they cover so many different aspects of investing, from high yield savings to crypto to fractional share ownership. So I think it's important just to everyone understand it's okay to have multiple platforms and multiple accounts.
Yeah. So for example, Robert, to your point, having a brokerage platform for a specific reason. I have a Vanguard account. I have it for the 529 account, right? Yep. That's the only thing I use Vanguard for because it's super simple. It's really easy. Yep. I deposit $200 a month into there and it gets invested into VOO and VUG, and it's cool. So I totally agree, right? Public.com is the easiest way for anyone to start investing. And now because they offer the retirement accounts, they got the crypto, the options, they got all these cool new features to their platform. They truly are head and shoulders above the Vanguards, the Schwabs, and these others who haven't adopted yet fractional shares or investment plans and things like that.
Yeah, I couldn't agree more. And Public is just a prime example of adapting to the audience. A lot of these incumbents like Vanguard, they just haven't made the changes necessary for retail investors who don't have thousands of dollars a week or thousands of dollars a month to invest. And so the fractional share part is just one of the great features that Public.com offers. And I really love that for the retail investors.